Hi folks, and welcome back to Meaningful Money. Still outside the village of Treen, high above Penberth Cove down there, far west of Cornwall, enjoying this fabulous weather. The sun is right behind the camera and right in my eyes, so apologise for the shades, but it's either that or I squint at you the whole time. Going to cover off how income tax works. Now, I have done this before, way back in episode 62, 63, something like that, but certain things have changed since then. The mechanics are largely the same, the numbers are different, so I think it's worth covering them off again. And so that's what we're going to do. Before that, as ever, my friends down here in the bottom right, that's Seven Investment Management, continue to sponsor me here, and I'm very grateful to them for doing so. Now, how does income tax work, and should you care? Well, you should care, because if you're working, you're almost certainly paying it. If you're retired, you're almost certainly paying it, so pay attention. Income tax is charged in bands, and I'm going to talk a lot about the ladder, the income tax ladder. And your income is stacked up in order, and it's stacked up against the ladder. So it's stacked in order. So the first thing which gets charged to income tax is your earned income. So that's obviously your salary if you're employed. If you're self-employed, it's any profits you make. If you're in receipt of a pension, that would be earned income. On top of that then is added your any interest that you get. So that's interest from money in the bank, right? On top of that, any dividends you get from any shares or any funds which produce dividends. And then on top of that, finally, is other stuff, things like rental income and things like that. So how does all that work in practice? I'm going to shove over a little bit and bring in one of my famous graphics. Struggling actually to see the numbers, so I hope I get this right on the notes. So the one downside on weather like this of having all your notes on an iPad is fairly difficult to see. Never mind. So here's the ladder. First thing to say is that everybody has a personal allowance. Now, as of a few days' time, the 2012-13 tax year, that personal allowance, if you're under 65, is going to be £8,105. If you're between 65 and 74, it's going to be £10,500, and if you're over 75, it's going to be £10,660. That's the amount you can earn without paying any tax at all. Okay, so that's called your personal allowance. I'm going to come back to that in a little bit more detail in a couple of videos' time, actually, specifically with regard to those age allowances, because last week in the budget, the Chancellor did something which lots of older people are not very happy about, so I'll explain that in a while. But for the purposes of today, and for some examples which I'm going to do next time, we're going to talk about the under 65 personal allowance, which is 8105 for 2012-2013. Now, the bands of income, the bands of income tax rates, rather, work like this. Once you've got your personal allowance out of the way, the first 2,710 is a special little band, and it's called the savings rate band, and that's charged at 10%. The next rate is the basic rate band, and that's at 20%, and that is the first £34,370 of earned income. I'm going to come back to that in a minute. Then between £34,371 all the way up to £150,000, then you're paying 40% tax. Income in excess of £150,000, you're paying 50% tax. Right? So those are your bands. But I've got to explain this savings band because it's really weird. I'm going to do an example next time. But the savings rate band is only there if you have savings interest which falls in that band. So you can forget that band if you are earning more than the personal allowance, and I mean earning by working or pensions or whatever. But if you have earnings and then a little bit of savings interest on top, and that interest falls in that 10% band, then you'll be charged 10% on it. But I'm going to sort of add more detail to that next time, so forgive me if I leave you in the lurch a little bit with that, because it takes a little bit of time to explain. I want to cover it off a little bit more here first. So you have these bands, these income tax rate bands, where you're taxed at different rates, 10, 20, 40 and 50. And those bands are on top of the personal allowance. So when I say that the basic rate band is the first £34,370 of taxable income, that is on top of your personal allowance. So actually, your first £8,105 of earned income is tax-free, then the next 34,370 is taxable. So actually, income between 8,106 and 42,475, do the maths, is at 20%. Everything you earn from 42,476 and above is at 40%. And then there's the higher rate band at the top, but even that is messed up a little bit, because there's also a weird little anomaly that if your income is more than £100,000, I don't expect that's true for many people watching this, but you never know. If your income is more than £100,000, then everything gets messed up, because what happens then is that your personal allowance down here on the bottom gets reduced, and it gets reduced by £1 for every £2 that your income is over 100,000. Okay, follow that logic. So that means that if your income is 110,000, then your personal allowance is reduced by 5,000, half of the amount over £100,000 that you're earning. A lot easier to do than it is to say, and that's what I'm going to do next time. Just explain a little bit more about these weird anomalies, firstly of the savings rate band, and then of the loss of the personal allowance. And the best way to do that by far is with examples. So that's what I'm going to do next time. So I'm going to stop there, just sort of reiterate that there is this ladder of bands, and that your income is stacked. The different kinds of income is stacked in blocks against that ladder, and that's how they determine what income tax rate you are charged. So I hope that is helpful and I haven't foxed you too much. I'll come back and put some meat on the bones next time. So thanks for watching this one, and I'll see you next time.